Hey everyone, welcome to today's video where we're gonna try to figure out if NIO will be profitable by Q4 of this year. As the CEO William Lee has been talking about over the past couple of months, we know that there are some good stuff happening. You can see that Firefly won't have dedicated swap station at least for 2025, but by 2026 they will utilize this new fifth generation NIO swap station that's gonna be universal for, I believe, Firefly, Nio and Onvo, and also third-party cars. And in addition to that, we know that NIO recently mentioned that they are getting more and more subsidies, and they are also getting another business model for the power swap structure build out where other companies will help to take the majority of the cost. NIO will still kind of push in somewhat of money in there, but they also gonna go from owning this swap station entirely to maybe renting some of them. So that's going to be interesting, but in any case, it's good because they're not going to be spending as much money on the power swap station build out. And my urge to the company would be that please, for the love of God, completely stop the build out. The utilization rate is less than 10%. The utilization rate across all swap stations is roughly 7.5%, which means that around 92% of the time the swap stations are not utilized. So we are not like anywhere near the current capacity of what they actually can do. So they are in no need to build out swap station. So the best way to figure out when they will be profitable is to have a quick look at the number of vehicle deliveries that we are expecting this year. My own estimations is around 355,000 right now with the information that I have at hand right now. I know the previous hopium from me was above 400, let's say 410,000. And in some cases on Twitter, the hopium there is like around 450,000. I don't think it's realistic with the information we have at our hands right now, but let's see, maybe it is gonna happen. But assuming a 350,000 deliveries, that would be like going to 19,000 already in April. And we can see that in April, we are right now at around 6,000 to 7,000 cars in the first 2 weeks. This is insurance registration numbers, so not vehicle deliveries. But this is what we know right now. Then we know that NIO traditionally is stronger in the second half of the month. And there are like more working days in the second half, so probably I would say that we're gonna do more than 6,000 to 7,000, maybe 10 to 12,000. That's why I get then at 19,000 deliveries for total month of April. Then I'm assuming a quite strong uptake to 32,000. That's gonna be a challenge. Hopefully they do it, but that's my base case right now. I know there is somewhat of a hopium still. And then June 34,000. Then we got into the Q3 when I'm assuming 3 straight months of 37,000, maybe let's say 34 to be realistic. And that's how I get to my 350,000 deliveries. Going to the Q4 actual expectations in terms of revenue and total cost of sales, gross profit and operating expenditure. For the entire year of 2025, I'm assuming that the operating expenditure is not going to be like being moved that much. It's going to go up slightly, but not like aggressively that we have seen previously. I do believe that R&D expenses is going to be around 450 to the highs, maybe just around 500 million. They have a lot of cars, 3 different brands and many models of each car that at any given time needs updates and facelifts. That is why I do believe that the R&D, it's unrealistic for us to expect that all of a sudden we're going to see our R&D budget of like 250 million. That's not going to happen in my opinion. Then the SG&A post, at around on row 23, even there, they've shown that when they start to manage actually sell more cars, they seem also to increase their SG&A budget quite substantially. The sales and marketing simply has to go up for them to sell cars. So I won't like be negative about that. That's just the reality. And we can see that the R&D total operating expenses is around 1.1 to 1.2 billion. The interesting part is how the gross profit will go from, let's say, just around 200 million in Q1, which we still have not gotten. So it's going to be like probably in 5 or 6 weeks from now, to like 750 million gross profit. And how will that look like for NIO in terms of profitability, as the CEO has previously mentioned? Let's start from the top, revenue. So Q4 was 2.6 to 2.7 billion US dollar in revenue. That resulted in 970 to 980 million in net loss on the basis of 74,000 deliveries almost. Now, Q1 was 42,000 deliveries. Traditionally, NIO is quite weak in Q1. Same scenario in 2024 and also in 2023. But in Q1 at 42,000 deliveries, that gives us a 1.7 billion or so in revenue, based on average sales price of 33,700, which is actually higher than Q4. The reason that this number is higher is because the 42,000 number is much lower than the 73,000. And they're gonna sell, I do believe, more NIO cars than Onvo cars in this quarter than they did in Q4, because they had quite actually huge deliveries in end of the year in Onvo deliveries. Whereas on this other side of 2025, the Onvo deliveries has been quite few. So that's why I assumed like a slightly higher ASP this quarter. But still in the bigger picture, the much different 43,000 cut in vehicle delivery is going to result in a 35% in cut in total revenue. Then we can see that the cost of sales, previously I was more aggressive, but here I'm giving NIO benefit of the doubt that the cost of sales for the entire year will be going like more efficient in a way. Like if the vehicle sales goes up, for example, in Q3 at 17%, I'm modeling the cost of sales going up by 12%, or in Q2, the revenue going up 80%, since my estimations in vehicle delivery for Q2 is roughly 80,000. This means that the vehicle sales going up 80.5%, whereas the cost of sales of vehicle sales going up 72%. So I do give them some like efficiency and some increased margin there's for sure. Only quarter where I don't do that is roughly the Q1, because they're just like really, really low delivery numbers. But if you look at these numbers, then you can see that the cost of sales is by end of Q4 is going to be 2.9 billion on the basis of a 3.7 billion revenue. That leaves us with a profit, a gross profit of 760 million or so. The problem here is that the operating expenses is roughly at 1.2 billion. That leaves us with a net income or net loss in this case. In the worst case scenario, maybe 460 million, and in the best case scenario, maybe 350 or even potentially 300 million in net loss. That's a nice improvement, and that's actually great to see, because we know that the cash on their hands by Q4 at this kind of rate still would be 3.5 billion US dollar. So they wouldn't need to raise if they start to make like net losses of, substantially lower than the one that we saw now, which was around 1 billion. Again, Q1 is going to be bad, but I believe that the guidance for Q2 is going to be much better. But now I give them some benefit of the doubt, Here I assume that they're going to get some nice efficiency based on this like increase in vehicle deliveries, which means that the cost of vehicle sales will be lesser because they are selling more Onvo and more Firefly than, let's say, the more expensive NIO cars. So that's going to be an interesting thing to look at. But according to my modeling, you might need maybe like 130 to 150,000 vehicle sales in order for NIO to actually become profitable. I haven't updated completely my 2026 numbers, but I would say that that's essentially what we would need, is that they need to sell like 150,000 vehicles to be profitable at this current stage, unless they have like something hidden. Like if they come out tomorrow or next month and they say like, we are gonna cut down the battery swap infrastructure build out by like 90% or 95%, and we're gonna cut down on number of car models by like, let's say maybe cut down from around 10 to 12 car models to maybe 7 to 8. If bar like something like that happening, I don't see them making profitability. But then there's like some hidden factors. Like for example, we know that the lithium carbonate price, that is a huge part of the cars, is continuing to go down. And is that so that although the lithium carbonate has gone down, maybe they were sitting on contracts with the battery manufacturers, like long-term contracts in the unlucky times of like, let's say 2022 and 2023. I don't know how they like no one knows how they negotiate their like their battery cost. Some companies like have more a fluctuating model where, for example, they follow the market. If the lithium carbonate price goes up by a certain amount, they negotiate that to follow that change. Whereas other companies might not do that as much. They might have a conservative way of looking at things. And if in this case, maybe NIO has like, for example, negotiated a deal for like 2 or 3 years, when the battery cost was high, and maybe those costs are now, as the battery swap cost, the battery cost is going down, maybe they're gonna finally, like at some point this year, see a huge drop in their battery cost. So unless any kind of wild card like that happens, or they complete crazy shutdown in number of battery swap stations at all, like going down with like 80-90%, I don't see them making or being profitable by end of this year. I do see them cutting the net loss, like from the 1 billion or so in best case scenario to like 300 to 400 million. That's for sure an improvement. If they do that, then this stock is undervalued. But if we see net loss by Q4 on a delivery of like 100 to 110,000, and the net loss would come in like at 600, 700, 800 million, then I would completely and utterly lose trust in the management, because at that point, like, they've been yet again like being on this path of not being honest with investors. But that is essentially the essence of the video today, to try to figure out when this company will be profitable, because the management is now going very aggressively and saying that. And they previously, again, don't forget the Onvo delivery numbers was supposed to be like 16 or 20,000 in March, right? And the entire vehicle deliveries last month was like 15,000. So yeah, they seem to like promise a lot of stuff. So be cautious. I know the stock is cheap, the valuation is very low, but the reason for the valuation being this low, 7 billion, 8 billion, is the fact that they lose $1 billion on a quarter according to the latest numbers. So there's a reason for that. It's up to the management to show some seriousness. And yeah, let's wait and see. And I would love to see your comments in the comment section. Do you think my numbers are correct? Am I missing something? I would love to, include your point of view in my next video. And please like and subscribe and share this video. And let's engage in a professional discussion. And yeah, see you in the next one.